Hey everybody, how are you? Hope you're doing well. Do me a favor before we get started. I need you to hit that like button if you're not a subscriber. I need you to do me a favor, hit that subscribe button and notification bell next to it so that you will not miss an episode. So how are you? Everybody hanging in there? All right, so today we're going to talk about investing, and we are going from this book again, or this magazine again, The 10 Rules of Investing, A Simple Path to Wealth. And we left off on page 9. So that's where we are on page 9. But just to recap some of the things that we talked about, I'd like to know if you have done them or if you have at least added them to your to-do lists. And let's see, the things that stood out were, let's see. Let's see. So the Roth IRA. Does everybody watching me have a Roth IRA? Or are you in a position where it's not happening right now? Either way, at least you have that ideal in your head that a Roth IRA is something important to have, whether that be now or in the future when the financial situation gets better. So we're all in different situations, all in different circumstances, but do know that it will get better if it's not good already. So some people watching me, you're way ahead of this already, which is perfectly fine. Thank you for supporting the channel. Only thing I don't like is that you don't help anybody else along. All right. So can I control that? No, I can't control it. So what I'll do for now is just thank you for supporting the channel. I do appreciate that. So some people are already way ahead of this. Some people are maybe a step or two behind. And then some people are reading right along with me. All right, so what stood out from the last time? We have the Roth IRA. Getting a financial advisor that is a fiduciary. So that's controversial for some people. Some people are do-it-yourselfers, right? Some people take the stance that I'm going to do it myself. If it's anybody that's going to mess up my money, it's going to be me. And I have met people like that. I have met he was a Jewish man, actually. He was a Jewish man that told me that. Because I know people have different opinions when it comes to seeking out a financial advisor. So that was his opinion. He's a Jewish man. On the other hand, some people have the opinion that, yeah, you need to get to a financial advisor. And that's something that you need to on top of. So the things that stood out were Roth IRA, and then a fiduciary when it comes to a financial advisor, getting a support system. And out of the list of the support system, this is what the magazine names: financial advisor, tax accountant, insurance rep, estate planner. So the magazine recommends getting a support system. And those are the 4 people that they named. All right, so have you put that on your to-do list? Or is that something that you're not interested in right now? Let me know in the comments. Let's see what else stood out last time. Last time I looked up the word derivatives. And come to the conclusion that the definition of derivatives is your futures and your options, and they also name some other stuff. But that falls under the category of derivatives. And then another thing was annuity. Does everybody watching me have an annuity? And if not, have you put that on your to-do list of things to do? So there's a lot of things going on that list, to-do list. Does everybody watching me have an annuity? Yay or nay? Yay or nay? All right, so now we're going to continue from where we left off, and that is page 9. And what they're doing now is they are talking about investing terms you need to know. So you may know these terms already. If so, just work with me. And if there's anything new on here, let me know that too. All right, so let's get started. Bull market. Bull market. A sustained period of upward trending stock prices, often triggered by a 20% increase in asset prices. Bull markets characterized by optimism and investor confidence tend to last for months or even years. So that's a 20% increase in your stocks. Bull market. Capital gain. The increase in the value of an asset relative to the price originally paid for it. This can include a type of investment like a stock or a product purchase like a boat. The IRS taxes individuals on capital gains in some circumstances. So capital gain is the increase in the value of the asset. So your stock was $50. Now it's $100. And the capital gain is the increase in that value. They named the stock and they named the boat. Anybody watching me own a boat? So when you think about capital gains, I never thought about a boat actually. Like I know it's for stocks and for houses, but I never thought about a boat. So that's capital gains. Commodity. Everybody wake up. Commodity, a basic good used in commerce that is interchangeable with other goods of the same kind. It often refers to a raw material such as corn, oil, or steel. Commodity examples: corn, oil, or steel. A basic good used in commerce that is interchangeable with other goods. So what's the 3 commodities they named? Corn, oil, and steel is what they named. And of course, there are others. All right, compound interest. The interest on a loan or deposit that is calculated based on both the initial principal and the accumulated interest from previous periods. Compounding multiplies money at an accelerated rate over simple interest. So compound interest, it multiplies money at an accelerated rate. All right, cryptocurrency. A digital currency secured by cryptography rather than a central or governmental authority. Most cryptocurrencies are based on blockchain technology, a distributed ledger shared by a decentralized network of computers. Cryptocurrency. Okay, derivative. A financial contract whose value is dependent on an underlying asset, group of assets, or benchmark. Its price derives from fluctuations in the underlying asset. Derivatives may be traded to mitigate risk, hedge, or assume risk with the expectation of commensurate reward. Speculative. So, derivative, a financial contract. And we had looked it up the last time. Examples of derivatives are futures and contracts. Futures and options. Derivative, a financial contract. Dilution. When the number of a company's shares outstanding increases, resulting in a decrease in existing stockholders' ownership percentage of that company and making each share less valuable. This occurs when a company issues new shares or when holders of stock options, such as company employees, exercise their options. Dilution, the number of a company's shares, results in a decrease in existing stockholders' ownership percentage. Dilution, so decrease. Diversification, a risk management strategy that mixes a wide variety of investments across financial instruments, industries, and other categories. It aims to minimize losses by investing in areas that would react differently to the same event. Dividend, the distribution of a company's earnings to its shareholders as determined by the company's board of directors. Dividends are often distributed quarterly and may be paid in cash or as a reinvestment of additional stock. So, dividend, as you know, that's money that they're paying you simply for holding a stock. Dollar cost averaging, a strategy for both beginners and long-time investors of systematically investing equal amounts of money at regular intervals, regardless of the price of the security. This can reduce the overall impact of price volatility and lower the average cost per share in total. Dollar cost averaging. Earnings per share, a company's net profit divided by the number of company shares it has outstanding. The resulting number indicates how much money a company makes for each share of its stock and is a widely used metric for estimating corporate value. Earnings per share, the profit divided by the number of shares. Earnings per share. So you're taking the profit and divide it by the number of shares. All right. Exchange traded fund, or ETF, a type of pooled investment security that holds multiple underlying assets and trades on an exchange just like a stock does. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. All right, so this goes on for, let's see how many pages. We got 1, 2. Oh, it's just 2 more pages. So is everybody still awake? Did you take away anything? Anybody take away anything? If so, put it in the comments. All right, so let's see. I'm going to go for another maybe 7 minutes, and then I will say deuces to you. Expense ratio. So you want to tell me what an expense ratio is? I know you want to be talking about this on a Saturday night at 10 o'clock. At 10:30 at night, what else would you rather be doing? What else would you rather be doing than this at 10:30 at night on a Saturday? Expense ratio. How much an investor pays a mutual fund on ETF per year as a percentage of each dollar of investment, calculated by dividing the fund's operating expenses by the net assets. So expense ratio is, you're going to take the operating expenses and divide it by the assets. So this sounds like something you would do in a business. So you're taking the operating expenses. Hello. Thank you for joining the show. So you're taking operating expenses and dividing it by the assets, by the net assets. and that is your expense ratio. Fixed income. So I'm sure you're familiar with the term fixed income. Somebody will tell you, I can't do such and such. I'm on a fixed income. Well, I heard somebody else say, unfix it then. Have you ever heard that? I heard somebody say that. Fixed income, a type of security. Ooh, they're talking about something different. This is different than what I'm thinking. Fixed income is a type of security that pays the investor a fixed amount of interest or dividends on a fixed schedule until its maturity date. At maturity, investors are repaid the principal amount they invested. Government and corporate bonds are the most common type of fixed income products. So, bonds has another name, and the other name for bonds is a fixed income product. So that's new information for me. That bonds are fixed income products. Okay, so let's just go for a few more minutes. Fundamental analysis, a method of determining a stock's real or fair market value. It measures the security's intrinsic value by examining related economic and financial factors. Intrinsic value is the value of an investment based on the issuing company's financial situation and current market and economic conditions. Fundamental analysis, a method of determining a stock's real or fair market value. It measures intrinsic value by examining related economic and financial factors. Intrinsic value is the value of an investment based on the issues company's financial situation and current market and economic conditions. Fundamental analysis. Okay, let's just do one more, and then we'll call it a night. Hedge, an investment that is chosen to reduce the potential for loss in other investments because its price tends to move in the opposite direction. Hedge, an investment that is chosen to reduce the potential for loss in other investments. So an example of that would be gold. So you've heard that before, that some people use gold as a hedge. And this is a protective measure. It's an investment that is chosen to reduce the potential for loss in other investments because its price tends to move in the opposite direction. Okay, so we will stop there. So what did you think, everybody? What did you think about this magazine that we are reading from? If you would like, feel free to get you a copy and you can read along with me, or you could just join in when I read. Actually, we are at the very, very beginning stages. We are on page 10, and this goes all the way up to page 96. And so I plan to do this like twice a month. So let me know your thoughts. Right now, we're just going over investment terminology. So far we have already covered 401k, active investing, alternative investment, annuity, bear market, Bitcoin, bond, broker, bull market, capital gain, commodity, compound interest, cryptocurrency, derivative, dilution, diversification, dividend, dollar cost averaging, earnings per share, exchange traded fund, expense ratio, fixed income, fundamental analysis, hedge, and then we have, let's see how much more to go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We have about 20 more terms, and then that'll be all the investing terms. All right. So do me a favor, if you like the channel, hit that like button. If you're not a subscriber, hit the subscribe button and notification bell next to it so that you will not miss an episode. If you know anyone else that is interested in improving their finances, let them know about this channel. Also, check out the free newsletter below. It is free. Tune in. I will be bringing people onto the show and interviewing them, and you'll see them on the show sporadically. All right. Thank you for watching, everyone, and I will see you on the next video.